Hello and welcome to a special edition of Yahoo Finance Live. I'm Brian Cheung. We are awaiting remarks from President Biden after announcing this morning that he's going to be nominating Jerome Powell to a second term as the top of the Federal Reserve Bank, again, the steward of the nation's economy. Alongside the announcement, the Biden administration also saying that they will be appointing Lael Brainard, who's currently a Fed governor at the central bank. They want to promote her up to the vice chair position at the central bank. We want to break down everything that's been going on with these announcements, but also taking a look at what markets are doing ahead of the official announcement from the administration. Again, we are awaiting President Biden at the South Court Auditorium of the White House. He's scheduled to speak at 1:20, of course, with, as is always the case with these types of events, it remains to be seen if he'll actually be on time there. But again, looking at bonds right now, reacting to the announcement, seems like it's a risk-on story. The 10-year yield, 160 basis points, that's up about 7 basis points on the longer end of things. The 30-year yield also up about 5 basis points, although it's worth mentioning front end of the curve has also risen, so it's not like the curve is steepening too much. You can see the equity markets right there ahead of you on the screen, broadly up. Dow Jones up about 0.5%, and the S&P 500 losing a little bit of steam that we had gotten earlier in the morning, up about 0.33% right there. So from a little bit more on the market activity, at least so far on this very busy Monday, let's bring Yahoo Finance's Jared Blickery, who's been watching everything going on in the markets. Again, seems like this is pretty much broadly a risk-on story, but tell us a little bit more about whether or not anything that we've seen from this morning's announcement has made waves in the market, Jared.
Yes, and you know, when I woke up this morning, I didn't think we were going to be doing a 1-hour Fed special, but here we are, Brian. Congratulations to everybody who set this up. Now, on the Wi-Fi Interactive, I'm looking at the S&P 500 futures contract since midnight, and here's that big spike up that we got on the announcement, but you can see we've given it just about all of it back. And if you take a look at the NASDAQ, it's given it back and then some. So we have the NASDAQ in the red for the day. Dow really largely, I would say, holding on to these gains because we do see the Dow, a lot of value in cyclical stocks in it, which are doing well today, especially financials and energy. But I want to show you what's happening in the gold market. We have a big sell-off underway. I'm going to put a 2-month candlestick chart, and you can see that huge red candle falling back to what had been prior resistance. So a lot of, I would say, in the gold market, at least pricing in not the inflationary picture that we have been talking about recently. And U.S. dollar index really surging higher. This is a 1-year high, perhaps even more. If we put a 10-year chart, let's see if we can get this. There we go. If we put a 10-year chart, we can see we've been chopping around basically for the last several years, 5 or 6 years, still in the middle of the range. But I want to show a max chart because this is important now. This goes back to the late 80s. And here's the U.S. dollar index. Doesn't look like it's doing much, but I just want to highlight 20 years ago, we got a spike up to 120 in the Dixie. And if it breaks higher, just like it did in 2014, as a result of the Fed hinting that it would raise rates finally, then I think we're going to see a huge move in the U.S. dollar. And that has a lot of policy implications as well. I'm going to get to some heat maps here, but also just note that Richard Clarida, who's going to be departing the Fed, we know Lael Brainard picking up the vice chair role, but he had been talking about the U.S. dollar and the strength of it, and that's really what's needed to whip inflation. And what the Fed is doing and jawboning about, definitely sending that message to the market. So, Brian, to recap here, I think this is a risk-on statement, but not as risk-on as initially had hoped, and really balance that all. You really have to balance that out with that stronger dollar. I think that's pretty instructive here. One of my big takeaways for the day, Brian.
Yeah, and of course, every time you see a 200-point gain on the Dow, you do kind of wonder, is this significant? Of course, 200 points in 2021, very different than 200 points, let's say, in the 1990s. But Yahoo Finance's Jared Blickery, thanks again for giving us the update on the market action there. Well, let's bring in a guest now to talk a little bit more about that news that we had gotten earlier this morning. For that, we go to Danielle DiMartino-Booth of Quill Intelligence and a former Fed staffer, I should add, as well. Danielle, thanks for hopping on, especially on short notice here on this very busy Monday. Danielle, just want to ask for your broad takeaways here. Jay Powell at the top of the Fed here and Lael Brainard in the second top job is the announcement there. Were you surprised by the announcement that we got this morning?
Well, I think, no, I wasn't surprised at all. And I've been saying for a very long time that as much as Biden might have wanted to nominate Lael Brainard to placate the progressives, she would not have been confirmable. In fact, I think the real plot twist, if you will, from this morning is that she was not named to be vice chair of supervision and regulation, replacing Rich Clarida. So that crucial position remains open, and we know that Clarida is going to retire early and leave by the end of this year. So the plot, the intrigue, everything continues at the Fed. And in fact, there are some moderate Democratic senators who might not even be willing to vote for her for this vice chair position, in which she won't have a direct effect on the banks because she has been outwardly political. We recall that in 2016, Lael Brainerd openly contributed to Hillary Clinton's presidential campaign. So there are still some reservations, I would say, among your moderate Democrats, and I don't think that Brainerd's being confirmed as vice chair is necessarily a done deal.
Now, this is very interesting because the politics, as you mentioned, are going to be very important here. But it's really interesting to see how both of these individuals have faced Senate confirmation before, right? Both Powell and Brainerd were part of that round of Fed nominations in the Obama administration in 2014. They both got overwhelming support in the Senate. So to the point that you were making earlier, is there any reason to suggest that it will be more difficult for them to get through a Senate that they're already used to facing in the past?
Well, I don't think that there's going to be, I mean, you might have a handful of people who are not going to vote for Powell. I think that I think you're asking two completely separate discussions. I think Powell's nomination and vote is going to go fine. He'll breeze right through it. He's been very conversant, very communicative with all of the members of the Senate. He's been up on the Hill a lot. He's an extremely active Fed chair. Excuse me. So I really don't think that we have to worry about Powell being reconfirmed. The same cannot be said for Brainerd. You're putting up on the screen right now 61 to 31. Again, I'm not so sure that she can even get 50 among the Democrats. They have said, the moderate Democrats have said, we want to meet with Brainerd. And they're going to have to learn a little bit more about some of her views that she has expressed after having been confirmed in 2014. She leans towards what appears to be socialism, and I think that bothers a lot of the moderate Democrats.
And it's interesting you point that out, although it's kind of an argument maybe in favor of her getting well more than 50 votes because maybe the fears on the GOP side of things will be assuaged in the fact that she won't be appointed for the top job, but rather the Fed vice chair job, which also isn't even the supervision role. But I just want to speak to the broad kind of macro economy here. I mean, we're talking about inflation, right? People aren't necessarily dialed into the overall intrigue or the musical chairs going on here at the Fed. What do you expect to be the inflationary consequences with these high prints that we're getting from a Powell and Brainerd-led Fed?
Well, I think what you have to bear in mind is that Jay Powell's new job is different than his old job, and he's facing much higher inflation than he was before. The pressure to expedite the tapering is going to be immense, especially as we head into this holiday season. And we're actually starting to see things like shipping rates come off their highs. We're starting to see companies rebuild their inventories. We're starting to see signs that 2022 might see inflation start to abate. But as far as going back to that 2% level, I doubt it. So this new leadership, if you will, and we don't know who's going to replace Clarida, but the four most important people on that board will be Jay Powell, Lael Brainerd, if she is confirmed, whoever replaces Clarida, and whoever replaces Randy Quarles. So as well as John Williams from the New York Fed. But you could theoretically have a lot of pressure because inflation is being persistently high. And it looks like it's going to sustain itself into the first quarter, at least, of 2022. You could see a lot of pressure to expedite this taper and get onto the business of raising interest rates.
Yeah, no, I mean, that's an interesting point that you bring up about the Fed presidents as well, because there's going to be replacements for the Dallas and the Boston Feds. Yep. I'm not sure about the New York Fed, about that term. I don't know when that term expires, but probably there's going to be a lot of opportunity to change the structure there. Sorry, what was that?
Brian, that's a very good point. And we don't know who's going to be in charge of Boston. We don't know who's going to be in charge of Dallas. Dallas, where I am right now, the Dallas Federal Reserve Board tends to lean towards hawkish appointees. We know that, even though the Dallas Federal Reserve, whoever that president is, does not vote until 2022. That makes Boston a much more important Fed right now because Boston does vote in 2022. And then there's the Bullard Waller combination as well. Christopher Waller is the Federal Reserve Board governor. And he has said that the tapering needs to be expedited. We have not seen a Federal Reserve governor dissent since 2005. So, but I think that when looking out to 2022, we need to be cognizant of the fact that Waller has said we really shouldn't be in the business of mortgage-backed securities tapering because housing has had plenty enough help. So I think the pressure from within, and to your point, the Boston Fed that's going to be voting. To your point also, we've got another hawkish member coming onto voting rotation in 2022. I think that the potential for multiple dissents, which Powell's not accustomed to, that's why I'm saying his new day job is nothing like his old day job. He has the potential for double and triple dissents if he digs his heels in and refuses to expedite this taper in the face of a midterm election season when politicians are screaming that inflation is too high and the Fed needs to do something about it.
Yep. And that conversation could certainly heat up as soon as in the next few weeks when the Fed has its mid-December FOMC meeting. It's interesting to see all the musical chairs going on here. It's like dizzying. It's like trying to keep track of the members of Fleetwood Mac. But Danielle DiMartino Booth of Quill Intelligence.
So you're running this special with good reason.
Hey, thanks so much for stopping by. On the other side of this break, we will have more coverage of the Federal Reserve announcements this morning as we await President Biden's remarks, again expected in about 10 minutes or so. Keep it tuned in right here on Yahoo Finance. Welcome back to Yahoo Finance Live. Again, we are awaiting remarks from President Joe Biden regarding the announcements that he had made earlier this morning about the nomination of Fed Chairman Jay Powell for a second term at the helm of the central bank, alongside Lael Brainerd to be promoted to the Fed vice chair role pending Senate confirmation. That should happen in about 5 minutes or so, although it's possible that announcement could come a little bit later. But we're pleased to be joined now by a guest inside the White House. For more on this, we have Bharat Ramamurthy, who is the National Economic Council Deputy Director. Thank you so much for joining us on what I'm sure is a very busy Monday for you. Just kind of starting off broadly here, the announcement here with the Powell-Brainerd-led Fed, what type of excitement does that give you inside the White House? Why ultimately do you think the president ultimately ended up going with this decision?
Well, thanks for having me on, and it's an exciting day. I think from the president's perspective, we've already had a huge amount of economic progress in his first months in office. If you look at where we've come from, we're at 4.6% unemployment right now. That's about 2 years ahead of schedule, based on what experts were predicting at the beginning of the year. We created 5.6 million jobs under this administration. Disposable income for families is up 2%. Relative to pre-pandemic. And in fact, the United States is the only leading economy in the world where household income and the size of the economy are bigger than they were pre-pandemic, even accounting for the effects of inflation. So we've come a long way. The president has been clear, though, that we still have a ways to go to make sure that we are building an economy that works from the bottom up and from the middle out. And his belief is that Chair Powell and elevating Lael Brainard to serve as vice chair of the Fed are a good team to lead that effort going forward and to balance, as the Fed has to, our focus on maintaining low and stable price increases and at the same time pursuing a full employment economy where everyone who wants a high quality job can get it.
So can I ask if you view this nomination as staying the course? Because the White House statement did point to the changes that were made over the last few years under Powell's leadership to prioritize reducing the shortfalls from maximum employment, even if inflation does get a little bit uncomfortably high for moderate periods of time, because you do still have both of these Fed people staying at the Fed under these picks. Although, again, you're kind of elevating one of them, Lael Brainard, to that vice chair spot. Is this kind of an affirmation of what they've already done and a continuation of the policies they've already set?
Yes, I believe the president thinks that both Chair Powell and now and hopefully Vice Chair Brainard have done an excellent job at the Fed, and that's why he wants to preserve that team at the top of the Fed's leadership. They have both been laser focused on building an economy where companies have to compete for workers rather than workers having to compete for jobs. That's the kind of economy where wages are growing, where benefits for middle-class families increase, where schedules become more predictable and more flexible for families who need them. These folks have been focused on stability on the price side as well. I think that we are in the middle of a challenging period where supply chains are producing inflation globally, not just in the United States. And it's going to be up to the Fed to navigate this very important time. And the president, I believe, wanted a pair of folks who are highly experienced, highly credible, and have broad bipartisan support both inside of Congress and outside of Congress.
Yep, and you could see the podium. Our viewers, by the way, can see that on our screen. We're still awaiting the president to approach any minute now. But Bara, in the meantime, I want to ask about climate policy because you hopped on as early or as recently as last week. So, by the way, thanks again for hopping on with us again. But you talked about the idea of climate being a top priority here, a climate-related risk that could come from extreme weather events, so the transition to greener energy might be an issue. Some were arguing that was in support broadly of a Brainard candidacy and that anyone that kind of prioritizes climate would want to prefer a Brainard over a Powell. Why'd you ultimately decide to go with keeping Powell there and then putting Brainard in the vice chair spot? But not only that, not the vice chair of supervision spot where she may have had a little bit more purview over those types of things.
Well, look, if she is confirmed as vice chair, Dr. Brainard is going to have an enormous effect on the Fed's decisions on the monetary policy side and on the financial regulation side. I think that her pioneering work on the impacts of climate change on the financial system and the right role for central banks to play on that front is the reason why the president chose to elevate her.
Yep. And I'm sorry about that, but it looks like the president's about to speak, so we'll go to him live right now. Thanks.
Great.
This morning that 5 families in Waukesha are facing fresh grief of a life without a loved one. At least 40 Americans are suffering from injuries, some of them in critical condition. And an entire community is struggling to cope with the horrific act of violence. Last night, the people of Waukesha were gathered to celebrate the start of a season of hope and togetherness and Thanksgiving. This morning, Jill and I and the entire Biden family, and I'm sure all of us, pray that that same spirit's going to embrace and lift up all the victims of this tragedy, bringing comfort to those recovering from the injuries, and wrapping the families of those who died in the support of their community. We're all grateful for the extraordinary work of the first responders, from law enforcement to the emergency room doctors, who are working round the clock to deal with the terrible consequences of what happened last night. My administration is monitoring the situation very closely. But now let me turn to today's announcement. 20 months ago, the COVID-19 pandemic exploded in America, creating the worst economic crisis we faced since the Great Depression, wreaking havoc not only on our economy, but the economies across the world. In just 2 months, over 20 million Americans lost their jobs, and unemployment rate shot up to 14.8%, the highest ever recorded in America. And all of you remember those scenes. Major cities and small towns, main streets that looked like ghost towns, boarded up businesses, empty roads, empty highways, empty airports, and empty train stations. Offices were closed, schools were closed, and hospitals were taken to the breaking point. When you remember the depths of the crisis we faced, it's all the more amazing the progress that we've made since then. We've gone from an economy that was shut down to an economy that's leading the world in economic growth. We've gone from small businesses being shuttered to a record number of new small businesses starting up. And we've gone from a devastating job destruction to record new job creation. Don't get me wrong, we still have a long way to go to fully recover from all the pain and destruction caused by the pandemic. And we're still dealing with the difficult challenges and complications caused by COVID-19 that are driving up costs for American families. I know for a lot of Americans, things are still very hard, very hard. But if you look at all the facts, you can only come to one conclusion. We've made enormous progress in this country. First and foremost, our economy is creating jobs, lots of jobs. In fact, we've seen a record new job growth in America this year, 5.6 million jobs just since I was sworn in January the 20th. More jobs created at this point in the new presidency than ever before in American history. We have seen a dramatic drop in the unemployment rate from a high of 14.8% in April of 2020 to 4.6% today. Earlier this year, independent experts were predicting it would take until the end of 2023 to see unemployment that low. Our economy is creating new businesses, lots of new businesses. In fact, Americans are starting small businesses at a record rate, up 30% compared to before the pandemic. Economists will tell you that an increase in new businesses is one of the best signs of an economy that's becoming more innovative and more dynamic. And that's because small businesses aren't just the heart and soul of America. They're not just the bedrock of so many communities across the country. America's small businesses are the primary job creators, innovators, and drivers that power our economic progress. That's why it's a powerful statement of the faith that we have in our country, where our country and our economy is heading. That small business creation is surging in America today. Which is why I'm proud to say, if you look at my presidency so far, it's a jobs presidency, and it's a small business presidency. So, if you look at the facts, here's what the record shows. Record job creation, record economic growth, record new small business creation. That's the story that should give us confidence about the economy that we're building. Confidence in ourselves, confidence in the future. Now, after years of wages being flat or falling behind, we're also seeing something else. Things are getting better for American workers. Higher wages, better benefits, more flexible schedules. Balance sheets for American families are better as well. Savings are up, home equity is up, credit card balances are down. And if you continue and combine the wage increases we've seen with the direct relief my administration has provided to middle-class families, the typical middle-class family's disposable income has actually gone up 2% this year, even after accounting for higher prices. That's the kind of recovery, just 1 year after a crippling worldwide economic crisis, that's unprecedented. And it takes us, it makes us stand out from the rest of the world. America is the only major economy, the only one in the world where the economy is bigger today and families have more money in their pockets today than before the pandemic hit. That's even after accounting for inflation. None of our competitors internationally can say that. None. It's a testament to the hard work and perseverance of the American people. It's a testament to the effectiveness of the vaccines and our vaccination effort. And it's a testament to the economic policies we fought so hard to pass and put in place, especially the American Rescue Plan. And it's a testament to the Federal Reserve. But for all the progress we've made, we know we still are faced challenges, serious challenges. We know there's a lot of fear and uncertainty in the country. We know it's tough for families to keep up with the rising cost of gasoline, food, housing, and other essentials. It's not just an American problem. It's a worldwide problem. Doesn't make it any easier for Americans, but it's a worldwide problem. Every country is dealing with the same problems emerging from the pandemic. Supply chain bottlenecks, disruption caused by spikes in COVID-19, elevated prices. They're all taking a bite out of our family budgets. Perhaps no entity plays a more important role in navigating these challenges than the Federal Reserve, because it's the Fed's job to balance two key goals. The first is to achieve maximum employment, to get as many Americans working as possible. And the second is to keep inflation low and stable. To meet these goals is going to require patience, skill, and independence. That's why today I'm nominating Jerome Powell for a second term as chair of the Federal Reserve. And I'm nominating Lael Brainerd to take the position as vice chair of the Federal Reserve. When our country was hemorrhaging jobs last year and there was panic in our financial markets, Jay's steady and decisive leadership helped to stabilize markets and put our economy on track to a robust recovery. Jay is a believer in the benefits of what economists call maximum employment. That's an economy where companies have to compete to attract workers instead of workers competing with each other for jobs, where American workers get steady wage increases after decades of stagnation, and where the benefits of economic growth are broadly shared by everyone in the country, not just concentrated for those at the top. Jay said it well last month, and I'm going to quote him. He said, and I quote, "An economy is healthier and stronger when as many people as possible are able to work. If entrenched inequities prevent some Americans from participating fully in our labor markets, not only will they be held back from opportunities, but the economy overall will not realize its potential. And those who have historically been left behind stand the best chance of prospering in a strong economy with plentiful job opportunities," end of quote. As chair, Jay undertook a landmark review to reinforce the Federal Reserve's mission toward delivering full employment. We're making strong progress toward that goal now. And I believe Jay is the right person to see us through and finish that effort, while also addressing the threat of inflation that it poses to our families and to our economy. Jay and I have had a chance to discuss his views on priorities for the Federal Reserve in the years ahead. He's made clear to me a top priority will be to accelerate the Fed's effort to address and mitigate the risk that climate change poses to our financial system and our economy. Extreme weather has cost our economy over $600 billion over the last 10 years. We have to make sure our financial system can withstand climate change and is prepared to transition to clean energy. The Fed must be a leader among central banks globally in addressing climate-related financial risks. He's also underscored the importance of the Fed taking a more proactive role in the months and years ahead in making sure that our financial regulations are staying ahead of emerging risks, be they from innovations in cryptocurrency or the practice of less regulated non-bank financial institutions. Having served as vice president during the depths of the 2009 financial crisis, and having worked with President Obama to put in place a stronger financial rules of the road, I understand the stakes of our regulations falling asleep at the switch, regulators falling asleep at the switch. Jay, along with the other members of the Federal Board that I will nominate, must ensure that we never again expose our economy and American families to those kinds of risks. I respect Jay's independence, and I also trust that he will follow through on his commitment to prioritize these issues with the skill that he has shown in his service to date. Now, some will no doubt question why I'm renominating Jay when he was the choice of a Republican predecessor. Why am I not picking a Democrat? Why am I not picking fresh blood or taking the Fed in a different direction? Put directly, at this moment, both enormous potential and enormous uncertainty for our economy, we need stability and independence at the Federal Reserve. Jay has proven the independence that I value in the federal chair, in the Fed chair. In the last administration, he stood up to unprecedented political interference, and in doing so, successfully maintained the integrity and credibility of his institution. It's just one of the many reasons why Jay has support from across the political spectrum. In 2018, he was confirmed with 84 votes in the United States Senate. His approach as Fed chair has earned the respect and support of groups from the AFL-CIO to the Business Roundtable, which brings me to one more reason I've chosen to renominate Jay. I believe having Fed leadership with a broad bipartisan support is important, especially now in such a politically divided nation. I believe we need to do everything we can to take the bitter partisanship of today's politics out of something as important as the independence and credibility of the Federal Reserve. This is vital to maintaining public trust in an independent institution like the Federal Reserve. And that is why I'm so proud as well to nominate Dr. Lael Brainard, to serve as Vice Chair of the Federal Reserve. By promoting Lael today to Vice Chair, I'm elevating one of the country's most qualified and dedicated public servants. She's one of the nation's leading macroeconomists. She spent years at the Treasury Department representing American capitals around the world on international economic issues. And she spent nearly the last decade as a member of the Fed, most recently working side by side with Jay as the Fed navigated historic economic and financial crises and reaffirmed its commitment to a full employment economy. Throughout her time at the Fed, Lael has also been a steadfast voice for tough rules to protect the pensions and savings of the American people. She's led the Fed's efforts to make sure the banking system serves everyone in the communities they serve, so that regardless of where you live or your background, every American can have access to credit they need to start a business, buy a home, and just have a fair chance in life. She's done pioneering work on how the Fed should account for the emerging risk of climate change to our financial system. And like Jay, her expertise and leadership have earned her the respect and support of Republicans and Democrats alike. I'm proud to nominate her to the vital role of Vice Chair of the Federal Reserve. Beyond Jay and Lael, I look forward in the coming weeks to nominating additional members of the Federal Reserve Board of Governors, including a new Vice Chair for Supervision. These individuals will help safeguard our financial system, and alongside Jay and Lael's leadership, help to support and continue this historic economic recovery. While Jay and Lael bring continuity and stability to the Fed, my additions will bring new perspectives and new voices. I also pledge that my additions will bring new diversity to the Fed, which is much needed and long overdue in my view. Last year, the pandemic shut down much of the global economy. Now there's a worldwide reawakening, and it's creating both an incredible opportunities and tough challenges. As economies all across the world come back from this pandemic, America's leading the way. Like every country in the world, we have to deal with these issues of rising costs. But we should remember, we have the skill and the tools to get it under control. While other countries are stumbling out of this pandemic, we're racing ahead because so much of the rest of our economy is doing well, because we have created so many new jobs as fast as we have. We're in a position to attack inflation from the position of strength, not weakness. In times like these, we need steady, tested, principled leadership at the Fed. We need people with sound judgment and proven courage to preserve the independence of the Fed. And we need people of character and integrity who can be trusted to keep their focus on the right long-term goals of our country, for our country. And I'm confident Jay and Lael are those people. Now I'd like to give both Jay and Lael an opportunity to say a few words. And we're going to start with Jay, and then I'm going to turn to Lael. Jay, the floor is yours. You're over this side.
Mr. President, thank you for this extraordinary opportunity to continue to serve the American people. If confirmed by the Senate, I pledge to do everything within my power to meet the responsibilities that Congress has entrusted to the Federal Reserve. I'm joined today by my wife, Alyssa Leonard, and our 3 adult children, Susie, Lucy, and Sam's wife, Alyssa. Their love and support underpin and make possible all that I do. I'm also grateful to the exceptionally talented and dedicated team at the Federal Reserve, with whom it has been my great privilege to serve over the last decade. My predecessor, Secretary Janet Yellen, left the Fed in a strong position to meet every challenge, and I'm thankful for her leadership, her example, and her friendship. When COVID hit our shores, American families and businesses were 10 years into historic economic expansion, with a robust jobs market that was reaching even those who had traditionally been left out. The pandemic, however, brought an immediate and painful recession. Fortunately, American resilience, along with strong policy actions and vaccines that enabled the economy's reopening, cushioned the blows and set the stage for a strong recovery. Today, the economy is expanding at its fastest pace in many years, carrying the promise of a return to maximum employment. Challenges and opportunities remain, as always. The unprecedented reopening of the economy, along with the continuing effects of the pandemic, led to supply and demand imbalances, bottlenecks, and a burst of inflation. We know that high inflation takes a toll on families, especially those less able to meet the higher costs of essentials, like food, housing, and transportation. We will use our tools both to support the economy and a strong labor market and to prevent higher inflation from becoming entrenched. Other key priorities include vigilantly guarding the resilience and stability of the financial system, addressing evolving risks from climate change and cyber attacks, and facilitating the modernization of the payment system while protecting consumers. I look forward very much to continuing to work closely with my colleague of the past 7 years, Lael Brainard, as the Fed confronts these and other issues. Lael brings formidable talent, a wealth of experience, and good judgment to our work. Inside the Federal Reserve, we understand that our decisions matter for American families and communities. I strongly share that sense of mission, and I'm committed to making those decisions with objectivity and with integrity based on the best available evidence in the long-standing tradition of monetary policy independence. Mr. President, thank you again.
Thank you. Now I'd like to give the floor to Dr. Brannon.
Mr. President, thank you. I'm deeply honored that you're entrusting me with this responsibility at a critical time. I'm committed to putting working Americans at the center of my work at the Federal Reserve. This means getting inflation down at a time when people are focused on their jobs and how far their paychecks will go. It means supporting a growing economy that includes everyone. It means ensuring that financial markets are thriving and resilient, and the economy is sustainable for future generations. It means serving all Americans in every community across the country and ensuring the Federal Reserve reflects the diversity of the communities we serve. I was privileged to work with Chair Powell as we made every effort to protect workers, businesses, and families from the COVID financial shock with the support of Congress. And I look forward to working with him in the months and years ahead to build a durable recovery. I also want to thank Secretary Yellen, with whom I've also been privileged to work. I'm grateful to the many people who have supported my efforts. As a working mom, I'm especially grateful for the love and support of my 3 dynamic daughters, Kaylin, Kira, and Coco, who took the afternoon off from school, my deeply devoted husband, Kurt, Aunt Vivian, my sisters, and my amazing mother, Joanne, who's here with me today. I'm confident that by working together, we will see a strong recovery for all Americans. Thank you.
Thank you. Well, folks, that's it. Hope you have a happy Thanksgiving. And I thank the families of the 2 nominees for being willing to support their work and what they have to do. It's going to be a long hours, as you already know, long efforts, and I thank the families. Thank you all.
Was your decision influenced by inflation, Mr. President?
And that wraps up the ceremony that we had seen just there from the White House, the president announcing the nomination of Jay Powell to head the Federal Reserve in a second term alongside Lael Brainerd in the vice chair role, again, pending Senate confirmation. A few recaps from that event that we had heard, which lasted about 20 minutes or so. President Biden saying that promoting Lael Brainerd, quote, elevates one of the country's most qualified and dedicated public servants. Again, she's currently serving as a Fed governor, but saying that he opted to keep Powell at the top job because, quote, we need stability and independence at the Federal Reserve. The president taking a good amount of minutes to kind of honor what the Federal Reserve had done through the crisis in preventing the pandemic from manifesting into a full-on financial crisis. He said that the economic rebound that we're seeing right now is a testament to the Federal Reserve. And then we got commentary from both of the individuals nominated today. Powell saying that he feels the economy is expanding at its fastest pace in many years, which carries, quote, the promise of a return to maximum employment, and Brainerd emphasizing the need to keep an eye on inflation. She said this means getting inflation down at a time when people are focused on their jobs and how far their paychecks go, a critical political issue as people see the cost of rising prices across the board. But let's get a little bit more commentary on the developments that we had just gotten with Joseph Minarek, the Conference Board Chief Policy Economist, and the former, I should add, Office of Management and Budget Chief Economist in the Clinton administration. So, Joseph, it's great to have you on the show. You were just listening into that ceremony just now. Any sort of initial thoughts about the nomination from the Biden administration this morning?
I think everything we heard was fairly predictable. The most important message that I heard was late in the president's remarks when he talked about trying to maintain bipartisanship and trust with respect to the Federal Reserve, which is one of the most important institutions of government, with respect to the performance of our economy, the maintenance of prosperity, and the price stability that is necessary to achieve that. We were at risk of turning the chair of the Federal Reserve into a virtual political appointment that would be bouncing back and forth from one party's administration to another. We don't need that. When you're talking about people of the professional caliber of Chair Powell and also Vice Chair designate Brainerd, we ought to be able to talk together like mature adults, talk about differences in policy without impugning motives and without raising questions about people's dedication to the country. We need really desperately to get back to that kind of a relationship between the Federal Reserve and the Congress and the administration. I think the president, in making this choice, has taken a long stride in that direction, which I hope is where we will continue to go in the future.
Yeah, at the same time, though, politics is always going to be the nature of any sort of appointment from the White House. And one element to that was climate-related financial risk, which some progressives had used maybe as a bargaining chip, maybe to tilt the scales in favor of a Brainerd chairmanship, which is not going to be the case. But the president saying in his remarks, and this caught my attention, that in his conversations with Powell, apparently the Fed chair made it clear to the president that a top priority was going to be to accelerate policy considerations on climate change. How do you think that's going to play into the nomination process, as you see some progressives and also Republicans kind of grappling with to what degree they would like a Fed chair to pay attention to those types of things?
The Federal Reserve is not the best choice of an institution to deal with the issue of climate change. There is a role there to play. It is important for the Federal Reserve and for other financial institutions to recognize the impact of climate risk on the balance sheets and the profit and loss statements of businesses and other institutions. They should do that. Chair Powell has expressed his interest in that subject and has said that he wants to go in that direction. But we need to understand that that is not going to be the sum and total of the nation's response to the issue of climate change. That has got to take place in a number of other governmental institutions that are more oriented towards getting purchase on that issue.
Now, I wanted to ask quickly just about the kind of implications of having Lael Brainerd, who is already at the Fed as a governor, kind of promoted to that vice chair role. A lot of conversations about why she wasn't picked for the vice chair of supervision role, which may have had a little bit more say in the types of regulatory policies that we were just talking about. Biden not really addressing that question there. Why do you think the administration opted to go down that road?
I really can't hypothesize too deeply about that. I can't say that I have any inside information on that front. I do believe, from my experience with working with Lael Brainerd, she is a highly skilled macroeconomist. She has done a lot of important work with respect to community relations and financial institutions. She took on that portfolio. She did very well. I think it's possible that the administration will be looking at someone from the financial industry who maybe has a longer pedigree in the field of financial supervision. I would have thought that Lael, as the vice chair in the general position, is really playing to her strength as a macroeconomist. And that would have been the direction in which I would have gone were I making such a recommendation to the president.
All right, Joseph Minneray, Conference Board Chief Policy Economist and the former OMB Chief Economist. Thanks so much for stopping by Yahoo Finance this busy afternoon. Well, as we head to break, want to point out what's going on in the markets. Not too much change. You can see the Dow still holding on to about a 200-point gain. That's about 0.5%. The S&P 500 also up about 0.4%. 10-year bond still holding on to its gains in terms of yield, up about 8 basis points to 162 basis points. 5-year in the belly getting a bit of a bigger boost, the 10 basis points. 30-year also getting a bit of a tilt higher, up 6 basis points. We'll have more coverage of everything Fed related on the other side of this break. We'll be right back. Welcome back to Yahoo Finance Live. Again, still digesting that presser that just wrapped up with the president introducing his picks for the top jobs at the Fed. Jay Powell at the top of the Fed as the chief and Lael Brainerd as the vice chairman role. Let's get a little bit more on this with Greg Valliere, AGF Investments chief U.S. policy strategist. And Greg, it finally happened. I don't have to leave my home without the terrifying thought of a Fed announcement just coming out of the blue. So we've got it all out of our system already. What's your initial thought about the announcement from the White House today about these picks at the top of the central bank?
Well, first of all, Brian, what took them so long? My Lord, it took a long time. And, you know, I was told much earlier in the fall that Janet Yellen went to Joe Biden and said, Powell's your guy, you know, stick with him. The markets like him, Congress likes him. But it still took Biden over 2 months to finally make the decision. You know, I have to think that maybe Biden has been wounded by inflation. His job approval numbers are way down. It looks like the Democrats may lose the House next fall. So maybe Biden was thinking, you know, this inflation issue has really hurt me. Maybe there's somebody else. And that may have been a factor in this taking so long.
Now, Greg, that's an interesting point that you bring up. I want to ask about what happened alongside the decision, or maybe a lack of decision, to wait this long, because a lot has happened in just the last few weeks, and even the kind of public discourse around inflation has really picked up over the last 4 weeks. So is it better or worse for the Biden administration that they didn't announce a pick, let's say 4 to 8 weeks ago?
Yeah, that could have been a factor as well. But, you know, the flip side of inflation, which is a serious political issue for Biden, the flip side is that the economy looks pretty strong right now. You look at last week's retail sales report was remarkably good. You look at unemployment data recently. I think this quarter, the fourth quarter, could grow at 5%. I think that first and second quarters could average out to 3.5%, maybe a little better. So the economy is clearly picked up.
Now, I want to ask about the political consequences of all of this, because there is kind of this open question here about whether or not some of the choice to go with Powell here allows the Biden administration, if inflation doesn't end up getting tamed, to put the blame on a Trump appointee, because it was Trump that put Powell in this position in 2018. Do you feel that's a relevant argument here? Because there's kind of a bit of an open question about how much the American populace generally cares about who's sitting at the Federal Reserve.
Yeah, that's a good point, Brian. At the same time, I think that you've got to say there is no template for dealing with a pandemic like the one we've been through, the greatest pandemic in 100 years. So a lot of this was done sort of, it was ad hoc. A lot of this had no precedent. They were in uncharted waters. So it's hard to say, you know, let's blame the Fed, let's blame shortages in Long Beach or Los Angeles and the ports. All this stuff was very difficult to navigate. I think a main factor, though, for Joe Biden was that the markets liked Jerome Powell. We see a rally today. I think Powell is viewed as a very solid guy. I think members of Congress like him. And I think a big factor here is the likelihood that Powell will get confirmed easily. Lael Brainerd probably would have, but Powell was a sure bet to get confirmed.
Now, last question here. There are still 3 vacancies, including the very important vice chair of supervision role, which some people were surprised that Brainerd wasn't installed, and she's going to be taking on the regular vice chair role. Who do you expect to see in those positions, which the Biden administration said they'll be filling or at least nominating in the next few weeks?
I don't know. I wouldn't even guess, but I would say this, Brian. I think there'll be at least one who's pretty close to Elizabeth Warren. Elizabeth Warren was not happy. She announced an hour or so ago that she would not be voting for Jerome Powell. So there's going to have to be at least one person for the progressives in the party. But otherwise, no, I'm not. I don't know the names.
All right, well, we'll have to see if there's any more rumors that come out of the DC Beltway in the weeks leading up to that announcement. But Greg Valliere, again, at AGF Investments, thanks so much for stopping by to break all of that down for us here on Yahoo Finance. Well, in the last minute or so that we have here, I want to take a quick look at the markets. Again, not too much change, although it's a little bit higher than it was perhaps before the president's remarks, which happened about 30 minutes ago. The Dow Jones up about 0.6%. The S&P 500 up about 0.4%. The NASDAQ down about 0.5%. I'm looking at bond yields as well. Looks like the 10-year holding on to its higher yields here. We got about 8 basis points higher on the 10-year, about 162 basis points, and the 30-year about 197 basis points. But the belly of the curve is getting more of the movement. You take a look at 3 and 5-year yields. Those have been getting a bigger bump as the 2-year on the shorter end of things do kind of also remain elevated. So not too much of a curve steepener trade going on here, if you will, but broadly risk on. The dollar index also getting a bump here, up about 0.5% to $96, or 96.47 there. So it seems like a bullish argument for the Fed chair renomination, at least from the perspective of the US dollar index right there. But again, big news, Fed chair Jay Powell slated to get a second term. Lael Brainard in the vice chair spot. We'll see if we get more digested news as we get into later innings of the market session here. For that, we will have more coverage on Yahoo Finance. We've got more on that coming on the other side of this break.